LLC business owners, I am Karla Dennis, and today I want to talk to you about 5 LLC triggers that will get you audited and how you can avoid them. For most people, they may seem uncommon, but for me, they're really common because I represent taxpayers before the IRS in audits. So I want to make sure you understand what not to do so that you can avoid an audit. Let's get after it. The number one thing that causes LLC audits is not filing your taxes on time. Many of you will allow your LLCs to go year after year, and you're not filing your actual tax returns because you believe you did not make enough income in order to file, or you didn't have any income. But when you form an LLC, you have created a filing requirement whether you've made a dime or not. So eventually the IRS is going to come after you, or they're going to do what's called an SFR. That's a service filed return, where they're going to file a return on your behalf based on information that they are aggregating on taxpayers just like you. So make sure that you're filing your taxes every single year. The second reason why LLC owners get audited because you don't pay your estimated taxes. You go out and you start these LLCs because you heard Jane did it and John did it and Mary did it, and now you want to do it. So you go out and you start these LLCs without understanding the filing requirements, without understanding that you need to pay quarterly estimated taxes. So you don't pay your taxes, you end up owing a big tax bill at the end of the year, and guess what? The next year, your return is flagged for audit. Why does IRS do that? Because they realize if you don't understand how to file your taxes on time, you probably don't understand how to file your taxes. You probably don't understand how to report your expenses, how to report your income. So chances are you are misreporting. So IRS is going to flag your return for audit just to make sure that you are in compliance. The third thing that gets my LLC owners audited is failure to report your income. This is a big issue. Many of you may be thinking, okay, I only made $5,000, but I had $7,000 in expenses, so I'm at a loss. Or I never received that 1099. I didn't get it, so how can IRS know that I made that money? Well, I guarantee you the person that was supposed to send you that 1099, they made sure to send it to IRS because they want to make sure they get that tax deduction on their tax return. So you're going along and you're filing your individual tax return, not thinking that you need to be filing and including the income for your LLC. Failure to report all your income can get you into a huge tax slinky, and that most certainly will trigger an audit. Typically, the way that it works is you will get a CP 2000 notice in August of every single year questioning you about income on your return. And then you will ignore it, not respond to it, and then here comes the agent knocking on your door. So make sure you are reporting all of your income as you receive it. The fourth thing that will get you audited is over-reporting of expenses. When you are running a business, absolutely, you should report all the expenses that you incur to generate your income. Code Section 162A states that you can take all the ordinary and necessary expenses. However, if you're having these big, gigantic expenses and no income, don't you think IRS would question that? Because they have the right to question things. That's why it's so important that when you're in a situation like that, that you put a statement to your return acknowledging certain situations. When we are working with clients, we always want to make sure that we are anticipating the questions that IRS is going to ask so that we answer those questions in the tax return so that we are not going to allow them to come knocking on your door to do further inquiries. So it's so important that you do report all your expenses. But if you are leaning far to the right or far to the left in one way or another, you want to make certain that you acknowledge that on the return. The fifth reason why my LLC owners get audited is that you fail to 1099 people that you are paying, your team members, your team, the people that are located in other locations. For example, you may have people working overseas in India or the Philippines working as part of your team. If you do have those individuals working as part of your team, you have to issue those individuals a 1099, and you have to do what's called backup withholding. You have to withhold 30% of the amount of money that you pay them and pay it to the IRS on their behalf. It's so important that you do that so that you can prevent yourself from being audited. There's so many little things that will trigger an audit. And LLC owners, you guys fall into it every single time. You don't do it on purpose. You do it innocently because you lack understanding. The final thing and a bonus tip that gets people audited is setting up multiple LLCs and never filing the tax returns. You need to make sure that you file the tax returns on all the LLCs that you open up. And if you no longer want to file the tax returns, please close it, dissolve the entity so you no longer have that filing obligation on record with the Internal Revenue Service. And let's do another bonus one now that we're here. Many times you guys will write down your expenses and you will put 500, 2,000, 5,000. I've never seen accounting always come out to zeros. That doesn't happen in the real world. And IRS knows it doesn't happen either. That's why it's so important that you are accounting for your income and expenses accurately. Do not guesstimate into actual zero type of numbers. Get your actual expenses, your actual checks that you wrote, your actual transfers that went to your bank account, your actual credit card statements, and record your actual expenses as incurred. Do not make up numbers because that's going to get you into a big IRS slinky. So as an LLC owner, you now know the things that are going to trigger audits. Not filing on time, not paying your estimated taxes, not reporting your income, not filing all of your entity returns, not 1099ing and backup withholding for your team members that may be in foreign countries, and making sure that you're not using round numbers like zeros. Use your actual numbers when you are filing your tax return. And when you do that, you will be okay. And if for any reason you do get audited, at least you know that your tax return will be audit ready. But now that you know better, you absolutely have to do better, which is why I want you to like, comment, and subscribe, and type in the word audit if you need help.